Hello and welcome to a brand new episode of Smart Money. Now, in the run-up to Children's Day this month, we thought it's appropriate to do a masterclass on how to plan for your child's future, his or her financial goals like education and marriage, but more importantly, how to imbibe the quality of financial awareness and literacy to your child at a young age. Joining me now is Vivek Bajaj. He's a very popular face on social media, so he needs no introduction perhaps. Vivek has been a learner of the financial markets for the last 17 years. He's also co-founded various businesses and is an active social media contributor with over 1 million followers. He's also the founder of StockEdge, an enterprise involved in simplifying finance. And for the last 5 years, he's been involved in empowering people with right learning and analytics in finance through his online ventures, elearnmarkets.com and StockEdge. Vivek, thanks a lot for being with us on the show. It's a pleasure hosting you. There's so much in this space, right? Because our children, by nature, they don't know anything about money. They don't know how to manage finances, whether you talk about children at an age of 5 or at an age of 15. So much to teach them. But tell us, what is the right age to introduce finance to your child? I
think 5 is a good age. And I'm seeing that change in my kids. I have 3 kids. My daughter is 13. My kids, my boys, I have twin boys, they're 8-year-old. And I'm seeing that distinct need of understanding how the money is operating. When I remember my old age, younger days when I was 18, 19, we were not thinking about money so much. We were always there considering ourselves to be entitled kids of our father figures, that they were taking care of things. But I'm saying in my kids, there is a definitely inclination towards learning about money because they want to spend. And the moment they have a requirement of spending, they want to know, sir, Papa, how are you making these monies? How are you helping us to spend that money? So I think 5 and 6 is a very good age to start talking about money. Okay, so when you say talking about money, right, what are the good ideas to teach your children about money? Let's talk about that. If you want to introduce financial literacy to your child, how do you do it? And what's your view on pocket money? It's very debatable, when to give pocket money to your child, how much to give. But let's start with financial literacy tools. Yeah. What are the main tools to look at? So, first thing first, we have to talk about money. The whole concept of financial literacy starts when we evolved from barter system to a common denominated money. So the best tool is, our grandmother used to teach us through stories. So the best tool is, as parents, we have to start narrating stories about money, about things which we are going through on a daily basis. Talk to your kids and maybe spend 15 minutes at the end of the day that, listen, I bought this and I'm very disappointed that I purchased this. Yeah, I bought this, I'm so excited. The moment they start valuing the things, not value in terms of moral value, but in terms of pricing the things which we are buying, they start also thinking about the money in that way. So experience sharing is the first teacher. And then there are, we are living in this globalized social media world. There is so much content already. YouTube is the biggest educator and they know exactly whom to follow, be it Mr. Beast or whoever the big influencers are. They are already making that impact of teaching them about the money. Okay. I wanted to understand how important is it to instill a habit of saving in a child and a practical concept of investing. You said you can start at the age of 5. Yeah. But children don't really know the difference between need and want, right? It's very confusing for them because they seem to want everything. Yeah. But how important is it to make that distinction very early on? Well, the whole need and want argument has also evolved. Now, today, because the overall per capita income has gone up and we all have earned more money, so having a better car, is it a need or a want? Yeah. For us, it's now a need that we want to travel, we want to have a basic luxury. Kids, they are considering it to be most obvious thing. If you talk to any kids and tell him that, we don't have car, and the kid will be like, we don't have car, what's like? Or let's take a very rudimentary example, internet, right? We used to dial in, right? And we used to love that sound of dialing, remember that sound? And now when you tell kids that internet is not working, the kid will say, what is internet is not working? We don't know this concept of internet not working. Yeah. So I think the whole need and want argument has to be seen in a very different manner. Let's accept the fact that when we talk to the children, we tell them that हमारे ज़माने में ऐसा होता था, हम पापा को बोलते थे गाड़ी दे दो, and Papa used to tell that, why do you need a car?
Yeah.
And now you can't have the same analogy drawn.
You can't.
You have to accept that the basic want, which we thought is a want, is a need for the child.
Absolutely, absolutely. So, you know, of course, this is a very long-drawn topic, and I'll come back to it on how to educate your child. But we also want to teach our viewers how to invest money to secure their child's future, because it's never too early to start investing for your child, right? So take us through the basics. If I want to invest money and I have a 5-year-old son, if I want to secure his future, how do I do it?
Well, you know, someone said that you should always start with Excel A1, cell A1. So cell A1 to the complete Excel. First open an Excel sheet and mention the age of your child and draw a 50-year map for the child. You will know that at this age there will be certain capital requirement, right? And if you have today X capital, and if you know that after 50 years you will be leaving a legacy of X capital for your child, then you can map that objective, that money requirement at a particular age with that requirement. So Excel sheet, everyone should have that Excel sheet. It cannot be that, oh, I know that after 5 years I'll have this capital requirement, so how do I plan that? No, you draw the Excel sheet. You look at after 5 years, this is the education expense required. After 15 years, this is an advanced education or a marriage requirement. And you can map individual assets with that specific goal.
Okay, you know, since I have a child of 5 years of age, I took the liberty to make that Excel sheet for you with a child who is 5 years old. It's just going to come up for you in seconds from now. So there you have it, right? The child's age is 5 years and there are about maybe 12, 13 years left to go to college. Taking into consideration inflation, the goal amount, the future value of the goal. So the goal amount, I mean, just go through this table for us. This is a table that you've shared.
Sure.
If I want a particular goal for my child's education, how much should I put in?
Sure. So 5-year age and I mean 12 years to go to the college. So I'm sure you are planning for that college thing. Inflation 10% because there are two legs of that inflation. One is the currency depreciation. You have to always consider that whatever, even if you are not asking your child to go abroad, in India also, your currency depreciation is something which, so 3% is your annualized currency depreciation, and long-term inflation 6 to 7%. So that's why the inflation rate is 10%. My goal amount is 51,000, and this 51,000, if I'm not wrong, this is 5 lakhs.
This is 5 lakhs.
This is 5 lakhs.
5 lakhs.
So 5 lakh is my goal amount and the future value is around 15 lakh. So basically considering the inflation, my requirement is 15 lakh after 12 years when the kid goes to the college.
Okay, so I have a requirement of 15 lakhs. I mean, this is very basic, right? We all know that no education will cost you 15 lakhs. It will be a lot more than that. Absolutely. But we're just taking this as a basic amount. Now, if I want to reach this 15 lakh goal, what do I need to do? How much should I split it? We've put the different assets there as well. How much should be in fixed deposit, how much in mutual funds, how much in stocks?
Yeah, so obviously you don't want to put the entire capital in equity because that will have a different risk profile. So what I'm recommending is you should have an FD, no doubt about it. Some people may not like this argument that FD should be there, but it gives comfort. It gives that security to that capital which you have. So you should have an FD equivalent to this amount because it's a matter of child education. You can't play with that. Then mutual fund, if you see the long-term return, 5-year CAGR of a typical mutual fund, it's around 13%, right? So you should park some capital there, which is equivalent to 61,000. And stocks, because I come from stock market, I understand the power of stock market. And a bit of sweetener to enhance your return is required to beat that nasty inflation. So I think 15% return should be expected from stock. So 54,000 is the one which you should expect.
But there's a question here, right? Because if I invest for my son now, after 12 years, so much would have changed. There's rapid disruption happening year after year. So when you talk about buying stocks, do you buy the blue chip stocks? Do you look at trends? Do you look at themes? How do you decide what stocks to buy?
Well, the ideal scenario is that if you are a passive investor, then you look out for stocks where there is a very high chance that those stocks will stay forever. I'll give you an example. I have a theme called mother stocks, where basically it's like mother stocks having kids, okay? And these stocks are having their own business. It's not a holdco. These companies have their own business. For example, State Bank of India. For example, Reliance or InfoEdge. These are the companies who are like mother companies. They are doing great in their respective businesses and their kids are doing phenomenal. make a basket of 10 stocks or mother stocks and keep on investing in them. If India is growing, if equity market has to grow in India, that is a primary hypothesis, then these mother stocks will give you stability and decent return.
So are these mother stocks like, are market leaders in their own genre, or are they high growth stocks? Are they stocks with low debt? I mean, what are your filters that you look at when you decide what to buy?
Well, this is very simple logic. I'm not looking at any filter. I'm looking at companies who are doing good in their respective business. For example, Grasim, they have business, they have good visibility of the business, and they also have subsidiaries or investment in other companies who are doing reasonably well. So you will be able to identify 10 stocks. I mean, you just YouTube Vivek Bajaj mother stocks, you'll get the video. I've recorded those 10 stocks. Peaceful investment. If you want to be passive, if you want to kind of not invest entirely in mutual fund, because mutual fund has its own plus and minuses, then these mother stocks can be decent return generator for you.
Okay, in fact, I wanted to talk about mutual funds a little bit because I get asked these questions a lot. What are the basic mutual funds that I should invest into for my child, for the longer term? So we have a plate that will come up for you. These are, of course, a set of mutual funds that Vivek has put together for us. It should just show up for you in a bit. Now, there are large cap funds, there are mid cap funds and small cap funds, right? So if you want to invest for your child's future, take us through this list, Vivek. What made you come out with this list? And the 5-year compounded growth is fine.
Yeah.
That's the past.
Yeah.
But what do you see as the next 5 years?
Yeah, so that's actually a very important debate. Whenever we talk about list of mutual fund, we always look at the historical return. But technically, you should go deeper inside the mutual fund, see the fund manager track record, see the cost, the management fees which they are charging, and a bit of just a quick glance of the portfolio which they have, which should make you feel comfortable. It should not be purely return which is driving. So when we have mentioned these are not the top performers, but these are the schemes which we believe that it's been decently managed in the past. They have a decent portfolio and they can still do better in the future.
Okay.
I'm of the school of thought who believes that I don't want to be the top performer. Yeah. I want to be a consistent performer.
Something that's stable over the next many years. And my question in that is, in your small cap fund list, you have Quant Small Cap, which has done very well. I mean, it's a 22% compounded growth. Yeah. I think because they do have a lot of exposure to, stocks like, say, in the Adani Group, and that's done very well for them. Yeah. But for my child who's going to perhaps use this money 18 years later, 12 years later, is it a safe bet? Yeah.
So we have to understand what are they doing, or any such kind of quant funds are doing. They are playing momentum. And we are living in as you said, that we are living in a world which is full of disruption. So value investing is an evergreen thing, it will stay forever. But there are many stocks where you'll see momentum coming and momentum going out. How do you invest in those stocks? The only way you can invest is by playing momentum. Adani, classic example. If you are a value investor, you would have not invested. But if you believe in price momentum, you would have invested. So momentum is equivalent to quant. That's where small exposure, because they are the only one right now in the market, apart from various small cases, I would say that a small exposure to these funds is not a bad idea.
Okay, it's a very interesting conversation and I do want to take it forward, but we have to take a short commercial break. Don't go anywhere. We'll come back and continue our conversation with Vivek Bajaj on how to secure your child's future. Stay tuned.